It's now 1 o'clock and I'm gonna call to order the Financial Audit Advisory Committee of February 26th. Thank you all for being here today. Before we get started, just a couple of quick announcements. I think we're still expecting Court Booth to join us. But we do want to announce that Sandeep will not be able to join us today. He's got another obligation. Bianca Taylor has resigned from the Light Board. And is also told me yesterday she wasn't gonna come today. So we, two people will be missing and Court's here. Thank you, Court. We just started. And then we also need to just acknowledge that Bob Conry's not able to join us today. A little logistical problem. I'm trying to coordinate this meeting, so he's not able to make it. So we will, is he here?
We have Rich.
Oh, Rich. Okay, so here's a question. Are we able to proceed with the reviewing of the regional audit? Rich?
If we can unmute Rich, just verbal chat and see if he's prepared to answer any questions in Bob's day.
I don't know if they better.
Rich?
Yeah, hi. Can everyone hear me?
Yes, we can. Thank you.
Yeah, so I was asked to attend just a little bit ago, so I'm not necessarily sure I can answer detailed questions, but I'm sure I could answer some general questions if needed. And certainly, if not, take down whatever questions are posed and provide you answers later on.
Okay, I want to ask one question. So Bob is not able to attend. Are you comfortable with us proceeding, or is Bob comfortable with us proceeding, reviewing the regional audit, knowing that he's not able to attend?
I really can't speak for Bob in terms of his feelings. He asked me to attend. He thought there was a chance that this meeting would be canceled since he was not able to attend. But it's a proceeding, so I'm here.
Okay, we did get a request from the superintendent to delay this review, so that would be my recommendation to delay the regional review. Okay, so I'm okay with that.
Don't think we're a choice.
I don't think so either. I just want to make sure everyone's aware of that. So, but Rich, thank you for being here and please stay. But understand if you want to leave or you have another obligation, you can do that as well. So we will need to schedule another meeting, and Scott, that's going to come your way too, because we'll obviously need to coordinate with your schedule to conduct that regional review. So apologize for the last minute notice to you, Scott, that we weren't able to complete this review today. So with that, we can now move on to our agenda. We do always start our meetings with public comment, which are usually restricted to 3 minutes per person. I don't see anyone from the public online, but is there anyone else here who would like to make a public comment? I don't think we have others. No? Okay. All right, then we're going to move right along on our agenda, and we will move to the review of the minutes from our last meeting. All of you should have received those minutes in your packet. The people get a chance to review them, and I'm certainly open to any feedback, comments. I didn't receive anything in writing, but any updates?
They're well done. I think they're appropriately reflect what was discussed.
Great.
I'm just seeing D on one of the verb tenses, but I will put it on the
Yeah.
airplane Monday night, but I'll find it if you could.
All right.
The content is good.
Thank you. I found a little paragraph, a little parenthesis we can fix. So, all right, with that, I would entertain a motion to approve the minutes from the 11th of February.
So, second.
Great. All right, all in favor?
All
right. Thank you all. Appreciate it. And we'll try to keep up the good work. Brian, thank you. Jennifer, thank you. Yeah. Okay, so with that, we will move right on to the review of the CMLP audit. Before I do that, I'd like to introduce Jason Bulger, who is our director of the light plan. I'm Jason, would you like to introduce him?
Yeah, bear with me now. I'm who's our financial manager and has been with CMLP for 10 months.
10 months. Okay. All right. So with that, actually, do we want to just have Scott? Scott, are you ready to review CMLP?
Yes, I am.
Okay, it's all yours.
All right, I'm going to share my screen. And while I do, I'm just going to, actually, I'm going to share my screen and then speak. I don't want to do two things at the same time.
Okay, I know how that goes. Multitasking too.
Good afternoon, everyone. As the chair said, Scott McIntyre, I know I was in front of the committee just a couple of weeks ago talking about the town audit. As my slide says, I was prepared to go through the district today, but it seems like that will be another time. Going to go through CMLP's 12/31/24 audit, which was finalized recently. My slides have followed a very similar pattern to what I did a couple of weeks ago. It seemed to flow okay, so I really duplicated it. So some of these slides you'll see are the same. Obviously, they've been tailored first to the district, but then to CMLP. So I'm going to walk through the results, and I have to go through a couple of slides here, since we're not talking about the district today. But here's today's agenda for the Concord Municipal Light Plant. I'm going to give you an overview of the audit, much like I did a couple of weeks ago with the town. An overview of their financial statements. We'll walk through some of the highlights. There's a slide, much like there was for primarily the general fund results of the town. The light plan, of course, doesn't have a general fund. It's an enterprise fund. And then I'll walk through our report in accordance with government auditing standards. And really, essentially, the issue that was talked about in the management letter a couple of weeks ago, it relates to the CMLP as well. For the reasons I'll get into relative to, it's really a pooled cash system. And I'll talk more about that after we go through the process of going through the audit process in the statements. So first is just the reports that result from this. One is our opinion on the financial statements. We, of course, do not express an opinion on your management's discussion and analysis and some of the required supplementary information, including the trend analysis of the pension and OPEB schedules that are in the back as well. I probably should have put on there, we also do not provide an opinion on your supplementary information. That's for the light plant. That is the combining schedules for the light plant operation, and then a separate operating statements for the broadband fund. So there's also the detail is in the reports, but there is no opinion on it. The opinion strictly covers the basic financial statements, which is the consolidated entity. And we'll also review the report on internal controls over financial reporting. Again, a little bit of a repeat here, a refresher. The audit process involves performing audit procedures to obtain evidence about the amounts and disclosures that are in your financial statements. When appropriate, we do sampling forms. We do sampling, so it's not to say that we're looking at, I bring that up to make sure that the audience understands and the committee understands that we are not looking at 100% of the transactions that went through the books and records of the light plant. There is no opinion on the effectiveness of the plant's internal controls. However, we do obtain a complete understanding of it so we can design our test work appropriately, and we obtain that understanding through performing walkthroughs of transactions and reperformance of transactions from origin right through to where it resides in the general ledger and ultimately on your financial statements. A quick overview of the financial statements. With this slide from a couple of weeks ago, this is where I talked about dual perspective financial reporting, both a long-term perspective and a short-term perspective. That doesn't exist for enterprise funds. There's no dual perspective reporting. But first, let's talk about the auditor's report. It is an unmodified opinion. In other words, it says based on following the audit standards that we did. And those would be two sets of auditing standards, generally accepted auditing standards here in the United States, as well as generally accepted government auditing standards. After following all those standards and completing our test work, our opinion on your financial statements is what is known as an unmodified or clean opinion. In other words, your financial statements are materially fairly presented in accordance with generally accepted accounting principles, or GAAP. Following the auditor's report is management's discussion and analysis. This is designed to provide readers with a general overview of I should say the plant there. I'm sorry, I didn't modify that to say to understand how the plant is doing. There's some great information in there, and I'll point out a couple of pages. I think it's on the next slide that I'll point out some pages. The statements for an enterprise fund are Unlike a general purpose government of the town, it's more of a traditional setup. When I say traditional, more of a business entity. It has a statement of net position, sometimes thought of as a balance sheet, but technically is just called a statement of net position. Statement of changes in net position, and so it includes the revenues, expenses, and other financing sources and uses. And then the statement of cash flows. And as perhaps this committee may remember, it's, I think, particularly for a municipal light plant and any enterprise fund in a local government, the statement of cash flows is probably the most important of the three. I never want to say the other two aren't important. I just happen to think that the statement of cash flows is where most readers of an enterprise fund statement go to. It includes the notes to the financial statements and required supplementary information. And in addition to RSI, or required supplementary information, you have supplementary information, which, as I mentioned a few minutes ago, is the combining statements of your light plant and your broadband fund. Just a quick note about some new financial account GASB standards for fiscal year 2025 and beyond. I mentioned these 2 weeks ago, but GASB 101 dealing with compensated absences or accrued sick and vacation. The standard for that has changed following calendar 24, and also GASB 103, which is the financial reporting model improvements. There's not a lot that's in there, but the timing of the things, given the fact that the town has a different year end than the light plant, is very, very important for people in Concord to really stay up on what's going on with GASB 103. So now some of the key financial results. First for the CMLP as an entity, and then I've kind of left pension and OPEB at the bottom half of this. It's very similar. It's basically what you see there for pension and OPEB is identical to what was on this slide a couple of weeks ago relative to pension and OPEB. I'll touch base on them, but first the light plant itself. The unrestricted net position, or UNP, was $7.7 million as of 12/31/24. It was about an increase of about $600,000 over the same point in time the year prior. Obviously, it represents a healthy unrestricted net position. You, of course, have other classifications of net position. Most of the total net position is, of course, as a result of the property, plant, and equipment, or your capital assets on your financial statements. Net position increased, total net position increased by about $3.1 million, very consistent with the prior year. So it's good, always good to see, as long as they're positive, of course, consistency in operations. And that's really what calendar 24 was compared to 23 for Concord Municipal Light Plant. The MD&A, or again, it's management's discussion and analysis, that reports many of the trends and percentages. There's also a great paragraph in there that discusses the broadband fund and kind of gives a brief history of it and where things are through the end of calendar 2024. I wanted to talk for a minute about the statement of cash flows in particular, since on the prior slide I was pointing out that, at least in this auditor's opinion, of the three pages in the financial statements, the statement of net position, the statement of changes, and the cash flow, I think this is probably the most meaningful to the majority of readers. The key things here that I think readers should look at, and credit rating agencies and financial institutions certainly all do, they look at the top of the statement of cash flows. Sort of the first subtotal that you come to is your net cash provided by operations. And the questions they ask are, they being the financial institutions and credit rating agencies, is that covering the principal and interest on the debt? Is it covering what's returned to the town in a payment in lieu of tax? And is it covering capital costs? And in Concord's case, for the calendar year ended 2024, the net cash provided by operations covered all three of those bullet items right there. I've been in a lot of credit rating agencies conversations with local governments over the course of my career, and that is really the only question that I have ever received from a credit rating agency relative to an enterprise fund, is relative to this sort of equation that I put up here on the slide. Is, does net cash provided by operations, does it cover those three items? So On the pension and OPEB, just a quick recap. In Concord, as a contributing participant in the Concord Contributory Retirement System, it's always good to note that that system is a little bit north of 90% funded. It's using a discount rate of 6.5%. That's becoming much more the norm in the Commonwealth of Mass. A couple of years ago, I would have said that the norm was closer to 7%. We've seen it trend downwards over the last couple of years. And just another reminder that the current funding schedule that's been approved by PERAC, which is the state agency that oversees all the pension systems, shows the past service cost being fully funded June 30 of 2023. So not all that many years away. And again, a 90% funded ratio. It's one of the highest. I have seen them at 100%. But certainly 90% is one of the highest that I've seen across the Commonwealth. Third bullet item down, the town's OPEB plan, and of course the life plan as a participating member of the OPEB plan is 68% funded. That one's using a 7% discount rate. In the actuarial report shows that being fully funded by 2039. Many of the key assumptions associated with both OPEB and pension can be found in the details to footnotes 16 and 17. There's also required supplementary information on those two liabilities. Generally speaking, it's 10-year trends. The retirement liability, that accounting standard has been around now for 10 years. So you see a full 10-year trend analysis of what's going on with the funding and the liability for pension. OPEB, that standard's only been around probably 7 years. So there's probably only 7 years of data. Eventually you'll get to 10-year trends. But there's some wonderful trend information in your required supplementary information. So just to recap now, that was sort of my walkthrough of the financial statements. We did also issue call it a management letter. It's a report that's required by government auditing standards. Remember, that's one of the two sets of auditing standards that I indicated that we followed in order to come to our opinion on your financial statements. What this letter does is it tells you what we did, and it also defines what a significant deficiency and material weaknesses, what they are. I'm not going to walk through them in detail. The issue with the light plant is essentially the same issue that we talked about a couple of weeks ago. With all of the things that went on in Concord over the past couple of years, the controls over cash reconciliations broke down. And as you know, the light plant, the cash is maintained by the town treasurer, and the control that exists is that the general ledger at the light plant, the cash accounts in that general ledger need to match with the general ledger cash accounts in the town's general ledger. The town's general ledger has multiple amount of funds. There's a couple funds in there that are restricted strictly for CMLP. The cash accounts in the standalone general ledger at CMLP need to agree with the cash in the town's overall general ledger. And of course, the town's overall general ledger has to agree with the bank account reconciliations, which is what we spoke about 2 weeks ago. During calendar year 24, the individual reconciliation between the standalone general ledger at the light plant was not always reconciled with the town's general ledger that includes the funds only of the light plant. So it's very much really the same issue as that we talked about a couple of weeks ago. And I just wanted to give you that idea of how the town and the cash have pooled accounts, and to understand that, for lack of a better way of saying it, I often say it's a triangle. One of the corners of the triangle is the light plant's general ledger. That has to match the town's general ledger for the funds that only relate to the light plant. And the third of the triangle is the cash flow. All three of those elements need to be reconciled on a regular and timely basis. And again, I know I'm repeating myself, but that's the control that broke down for the light plant during calendar year 2024. So that's a super quick walkthrough of our audit of the Light Plant's financial statements and a quick overview of the material weakness that we issued relative to cash reconciliations. I will turn it back to the chair and try to answer any questions that the committee may have.
Okay, so I know we just, we were talking about the material weakness and the alignment with the town, and we did review that. Since Jason's here and Ann, I just thought, Jason, it would be appropriate for you to speak to the management response that was included in the audit.
Yeah, absolutely. Okay, let's start soon. Is that I think that's anyway.
This is the issue.
So thank you, Scott, for that walkthrough and explanation, and we're happy to talk a little bit more about the process and the controls and then how we see them and what our response was. So obviously, as Scott said, our goal is on a regular routine basis to match our cash balances in our system with the town system. And there was obviously some challenges of doing that in 24. Some of that had to do with the timeliness of journal entries and posting on the town side, because there were, I think, some transactions that were well over 365 days that were posted in a period after they actually occurred. And so as we're trying to close our months, which we do somewhere between 60 and 90 days, we close each month, we're trying to then go back and tie that to the town's system. And we obviously have a fiscal year end of December 31st. And so we're trying to close our financial year then, which is not an important date for the town in terms of the general ledger. But yeah, we obviously experienced some challenges in doing that when there were delays in posting transactions. And so I think that, you know, where we see this going forward is that the town has already committed to a routine closing or reconciliation, cash reconciliation on a 45-day period after a month end, to do this monthly. That will greatly help us, because that would likely be before we're ready to you know, do something. If we're in that 60 to 90-day time frame, that we'll be able to go back and reconcile cash as of that month. I think our variance is about $170,000. It's entirely possible that we are overstating our cash because we weren't aware of transactions that were correct transactions that the town had made. But we did hire Clifton Larson Allen to undergo a reconciliation month by month. It was important for them to start in 2023 because that's some of the transactions that were changed back to that period. And so we had them go back to January 2023. They are at least through April of 2024 right now. So the worst case scenario, they've got about 8 months to go. And we do anticipate them wrapping up very soon with that. And that will kind of be, in the end, it will show us where every variance was and why it, you know, appeared, and how we can make adjusting entries to get that down. Either the town is understating our cash balance, or CMLP is overstating our cash balance, or some combination thereof. You know, it may be overstated over here, but understated over there, and vice versa. So we would anticipate making those adjustments, and then with this renewed commitment to have an ongoing reconciliation, it will be easy for us to do that going forward. And we obviously historically have always been able to do that monthly. It was about April of 2024 when that became really challenging, especially when we saw our 2023 balances changing, because we didn't know when the town might be completed through their reconciliation through December of 2024. And that's kind of when we said, well, let's wait until we hear that they're done before we start, because it's really difficult to reconcile if numbers before that are continue to change. So I think that going forward, we feel very confident that we'll be able to easily reconcile cash with, I was easily is maybe not the word. It's not, any reconciliation can be a challenge, right? But we have a process that we have confidence in, that our staff and the town staff will be able to work together on a rolling basis to make sure that we investigate any discrepancies or variances between the two systems. I think something that came up last time about the complexity of the billing system. The same system that we use to bill is used by public works, including water and sewer, stormwater, solid waste recycling. And that is a challenge because they are, it's follow the town's fiscal year, we have a different fiscal year. And all of this money is pooled with the town's cash, with all of the other, excise bills and tax receipts and other fees, so. It's definitely a big pool of money. I think that, we have I think CLA, as they've helped the town, that they've come up with a process that can be repeatable by town staff on an ongoing basis, so I think that we'll just look forward to getting to that point in the very near future where we feel comfortable, that we can do this on a timely basis.
That's great. Can you just clarify one thing for me? So you said CLA's hired. Are you looking at just the transactions related to the variance or all?
Well, you have to do everything in his cash, right? So it's AP, journal entries, AR, like everything is fair game, because if it hits cash, then we need to look at it. And I think that that period up through April was where we kind of said, this is too difficult to continue to do. I think it was probably easier for them to get through that point because so much work had already been done. So I think that we're in a good place for them to pick up, and I think the records just get better and better after that, so.
Let me ask members of the committee, did you have any other questions in regards to Jason's response update? With that? Bruce?
Just confused as to why it's so difficult to do. When you book an entry on one side, you book an entry on the other.
It's definitely a one to an amendment to one on both sides. For example, when the town takes in 3,000 payments that we've issued 3,000 bills for, they give us one journal entry to say you got $700,000 in cash. And so we have to tie that out, and some of that has been posted, say, to the wrong account. It's been posted to water sewer erroneously, or CMLP erroneously, right? So then later, when that's reconciled, then there's an adjusting entry, and then that has to be made on the, so I think that on its face, it seems very simple. If there was one transaction here and one transaction here, it would be very simple, but there's one to many on our side. There's a many to one on their side, and I think it gets very confusing if there's ever any reason why something needs to be changed. And I don't know, Dan, if we have anything else to add to that.
No, the only thing I was gonna add to that is the same thing is with accounts payable, so when they pay our bills. We get one amount taken from our banking account, but in our system, it could be 20 bills, it could be 30 bills, it could be, 100 bills. We only see one number on the town side, and so we have to match that one number to many bills on our side.
And if an account number was used incorrectly, or when somebody entered something, remember, we're entering into two separate systems. And so then we need to fix it and go back and, right, it just gets complicated. But it's possible, and it had been working, it was a lot of manual effort to get that.
And just one more issue is sometimes when adjustments are made, so if there's an issue with accounts payable. Sometimes the adjustments won't be made in the accounts payable module, they'll be in the general ledger module. So I can't even take my AP to my AP to reconcile, because some of the AP transactions could be in general ledger.
Get a process problem.
But I think we talked even last week, just when we were here, about needing to understand more broadly what this is and what the potential solutions are, because it's obviously doesn't feel tenable. And I'm sure reporting can help, but still, and it begs the question, should water sewer stay in the NISC system or not? So that's a longer.
I think even between separate the water sewer conversation, just NISC to munis.
Yeah.
That world can be simplified too. And, we're looking at opportunities to maybe do an import for AP so that if NISC stays the system of record and both town staff and CMLP have access to it, then you could do an import into munis to get everything so that those numbers will tie out. And then, in the past, they've also explored having the treasurer use NISC to do check runs from that system directly. So there are other solutions, and we've talked to, I think it was Markham back then, but CBiz about understanding the controls that we would like in place to make improvements on the process while having third parties still say, yes, there's enough controls that we're not concerned about how cash is leaving, the town on behalf of CMLP.
Great. Any other questions?
Yeah, so the comment that I think cash is reconciled through April.
this is an audit as of December. Is there 8 months of cash that has to be reconciled yet, or the year-end balance is reconciled? We're just going back and looking at reconciling each month individually.
Yeah, you wanna speak to that?
So there is a difference as of the end of 2024 between Munis and CMLP system. It's about $170,000. That is what CLA has been asked to reconcile. As we said, it could be that on the Munis side, there were funds withdrawn that we were not informed of, so we didn't make the entry on our side. Or there were funds that maybe we have money that went to sewer or water on the side, we don't know. And that's what CLA is tasked to find. The all the transactions, figure out what transactions are missing in which system.
Is this a categorization issue between these funds, or is this actually we haven't reconciled cash to the balance sheet as of 12/31?
So
I think
What I heard was is you get the munis, you got the storm fund, you get these different funds.
No,
We're
so
trying to put
the
the money in the
munis-
right place.
the Munis CMLP cash. And the CMLP system cash,
Mhm. Are different.
different, yes, by 170,000, and that's what CLA is reconciling. To figure out. Which side is right, or which side, maybe like Jason said, we might have stuff that's correct that Munis doesn't have, and Munis might have stuff that we don't have. It's a combination of the two. But there are transactions that are missing in one or both systems.
And 170,000 was the starting point, it may be, we didn't get a current balance of what it really is today, it may be quite less once they understand what.
Right.
If you do this, you're actually only 30,000 or 20,000, right, because.
I don't know if they haven't told us if they found anything through April. They just said they reconciled through it.
And CBIS, how did you get comfortable, or did you get comfortable with this not being reconciled through the audit opinion thing?
We got comfort because of our materiality level. The 174 that is talked about and is the difference between the light plant's ledger and the town's ledger. We determine that to be immaterial to the user of the financial statement.
Or CMLP bills being paid out of the town and treasurer.
All of our cash is in the.
All the accounts receivable, all the money that comes in, all the money that goes out is.
And that plays back to the question about you wanting your own account. Is that partly what?
Well, not to control.
Yeah,
Just to help reconcile it.
Yeah.
I mean, I think that, I've talked to Jennifer, and I think we're in agreement that right now with water and sewer and other enterprises ending up in the same system. It may not provide the benefit that we want, and may create more overhead down the road if the light plant and broadband funds are isolated. In one system, then an account could actually be
Yeah.
useful to have to reconcile, just because we never get to do bank level reconciliation, which all of our staff are used to working in other companies, right? It's like, well, we know where the bank is, we know what the general ledger is, and we know what this other system says, we can tag them all together. We have no visibility into the bank statements, it wouldn't help us if we did, because of the nature of cash.
The CBIS letter also says turnover in the plants account, not just the town's treasurer collection position. So there's turnover in the CMLP staff. How many staff?
Can't close it, just keep it open.
They'll be good.
Oh, they'll be happy, yeah, just exit.
When I introduced Nan's, that she'd been here for 10 months, Nan's turnover is the only one in the finance department. If we have 4 finance team members at CMLP.
But you had a vacancy, right, in your
We did.
leadership, so that
Yeah.
is significant. That's complimentary.
I mean, I will say that the reconciliation happened before the vacancy.
Right.
Matt left in September, and we have issues going back well before that.
Okay, so he left September 24 and the reconciliation stopped in April.
Yeah.
And then I did try to reconcile the cash myself and Jason. I went through with him all the different ways I tried to reconcile it, but not being here at all for 2024 was a hindrance. Not having the reconciliation done since April was a hindrance, and I was just
And this isn't a new issue. I mean, fire audits, this has always been, this is the system to system issue that's always been in town.
And the
So,
timing challenge. too.
yeah, it's much harder.
Was it a material weakness in prior years?
No, it was not. It
So
was a significant deficiency.
what tipped it to be material this year rather than significant?
Scott, can you speak to that?
If I could just hear the question one more time, please.
What tipped it from being a significant deficiency in prior years to material weakness this year?
I would say the answer to that is the depth of the overall situation in Concord, where the town holds all the cash, and that wasn't being reconciled. So some of the weaknesses between the light plant and the town, we categorized as a significant deficiency. But when the overall cash wasn't reconciled at all throughout the year, that's when we, in our judgment, bumped it up to a material weakness.
And can I just interrupt here? I might have just misspoke. Your question was about CMLP.
Yeah.
And I think I was responding to the town's audit. CMLP, this was not a finding in prior years. We just know on the town side it was for the reconciliation. So my apologies for that confusion, because the audit was clean the last couple of years, if I recall.
Does that mean in prior years that it was reconciled?
Well, I gotta admit, I was confused by the question because I don't
Yeah.
have the prior year CMLP in front of me, but I didn't think this was an issue, CMLP. So I don't think it went from significant deficiency to material weakness. It just went to material weakness.
Right, Scott, you're correct. I know that in the last 2 years, it was not identified as a control issue on CMLP's audit. It was on the town side, so my apologies. So,
I'll ask this question like I asked in the last meeting. Were there any unadjusted differences that were booked? Aside from cash.
There probably were. Obviously, the impact to the roughly $170,000 would have been a past adjusting journal entry. I do not know off the top of my head if there were any others. I really don't think there were other than that one, though.
We should put that as a clause.
But the request, yeah,
That's the
yeah.
adjusting entries that were identified as part of the audit.
I will say, I know that in the past, working with the auditors, there's usually a list of adjusting entries that we need to make as a result of the
Yeah.
audit. This is the first year in a long time we haven't had any, not a single adjusting entry. We've had.
I did not
as a
get it.
result.
You didn't have any?
I did not
This audit?
receive any.
Well, that's good. It's great. Okay,
That was a question we had when we met with them last week, 2 weeks ago.
yeah,
To review is, where are the adjusting entries? No, everything tied back to the cash or to the.
Source documentation, yeah.
The trial balances,
Okay.
that's what.
okay, great.
Question on the supplementary information, I hadn't focused on it closely, but what caught my ear was this on the discount rate for the pension going from used to be 7 to 6.5. What year did that change?
That was several years ago.
And do you go back and restate it? Well, I guess I should.
Yes.
Do you go back and restate the prior years at the new discount rate, or do you leave them at whatever the discount rate was then?
Is that for me, sir?
If you can answer the question, it'd be great.
I can. No, when the discount rate is changed, the standard is referred to as a change in one of the assumptions. And that gets changed a little bit in the current year and a little bit going forward. So in other words, if the discount rate went from 7 to 6.5, you would expect the liability to go up. So the liability is
Right.
going to go up. And the offset to that is partially to expense and partially to an account called a deferred outflow of resources. And that change of assumption would get amortized through expense over approximately 5 years. It's not exactly 5 years, but about 5 years.
Thank you.
For any other questions? So Scott, I actually had a couple comments when I went through the audit, not necessarily on the material weakness finding. One was just an observation that in the report itself on pages 8 and 9, you're missing some titles to refer to 2024 and 2023. I think that just the titles of the financial columns are missing.
Okay.
And then I had a question about lease management. There's different kinds of leases here in the light plant, and you commented about concerns on the town audit as it relates to lease management. Did you see any concerns with lease management on the light plant?
No, we did not.
Okay, I didn't think so either. And then another question that was in the audit, and this might be a Jason question. On Spruce Mountain, we have contracts for rats. The audit report said that we sell those rats. Are we retiring them ourselves? We're not selling them.
No, we
But are
generally retire. all
We
of them.
retire them, which means we're paying, for it, right? Okay, so just a clarification. And then I just had a future question here around Gatsby 103, Scott, like you referred to this twice on the town audit and the CMLP. What is the nature of the change in the financial model or the improvements that are being made? Can you just describe that and why that's a challenge? Yeah.
I'm chuckling because in about 2 hours, I'm getting together with an associate because we have to do a presentation in a couple of weeks to the Massachusetts Municipal Accountants and Auditors Association on this. So, well, 4 years ago, this was going to be a massive new accounting standard for governments to deal with. The good news for all of us is that it's not even remotely as robust as it was once planned to be. There's the implementation of it will probably impact. You probably won't really notice it, but there will be some presentation differences in the financial statements. In other words, the statement of revenues and expenditures and changes in fund balances, there'll be some different categories in there. Right now, it's operating revenues, non-operating revenues, and then capital contributions. The classification of certain transactions as an operating versus non-operating versus capital contribution will change. Subsidy issues could come into play, and there will be changes to the management's discussion and analysis. If you asked me that question tomorrow, I could have given you a better answer.
Yeah.
That's a quick overview of it, at least.
Well, just more to follow. As the audit committee, we just want to understand what these things are that are coming down the pike and how significant
Yes.
they can and can't be. So that's helpful.
The one that I think collectively is probably more work for the town as a whole, all of the organizations, is GASB 101 on compensated absences. That'll be applicable for your 25 audit. The standards, it used to be that the liability was what you'd have to pay out when people retire. It's now, what are they going to use? Pardon me, let me withdraw and rephrase. In addition to what you have to pay out, it's what they're going to use before they retire. That will be part of your liability. So I think across the board, with the exception of the district, our findings have been that this standard doesn't impact the liability of school districts or school departments that much, but to other departments in a community, we've seen it almost double the compensated absence liability.
Funny that it wouldn't affect the region, because the region, the difference is their pension system's different, but is this also, I mean, it's just benefits in general. Why would the region be different?
It's based on it would only be different because of the nature of predominantly teachers in their contracts. I'm talking generally here. I'm not talking just Concord, just based on my experience with this statement, is that the earned time for teachers is different than it is for, say, police officers, light plant workers, firefighters, DPW workers. The earned time is very different, and so that what we have found is that in general, the liability for school districts and school departments does not go up that much because of this standard. But for other departments in a town, we've seen it almost double.
Well, we're gonna keep our eye out and maybe a follow-up for us. So, all right, that's great. Okay, so I think, I know I've asked my questions, and I think, Scott, I think what we do know is that we're gonna have to have you come back and talk about the regional audit. So I know Jennifer will probably be outreaching about, your availability for a future meeting. So we'll have to follow up on that separately.
Okay,
Okay, so we'll outreach separately on that. Okay. Outside of that, I think, Scott, I think we're all set from a auditor perspective,
great.
procedure
Thanks.
perspective.
Thank you and have a great day.
Oh, Scott, just one more thing. Will you send us those slides? that
Yes,
You presented here? Yeah, great.
I'll send them to Jason.
Yeah,
I'm,
Jason.
I'm gonna go ahead and just, for the
Good.
record, I had one PowerPoint presentation for the district and
Okay.
CMLP. I'm gonna break them into two, and I'll send you, Jason, just the CMLP ones.
Sounds good.
Okay.
Thank you.
Sounds great. Thank you, Scott.
Thank you.
Appreciate you joining us.
I'll forward along anything I received.
Yeah.
For the packet or minutes.
Okay. Yeah. I wanted to just comment on one more thing, and if Bianca was here, she would appreciate this. One of the things as I look at I guess it's the net position, not the cash flows, but the operating, the margin for the plant is very healthy, at a good 6%, just the light plant itself. One of the issues that Bianca had raised was a compliance question around DPU reporting. And so I think in the audit itself, the DPU regulates the rates. That's their function. There is some reporting that Jason's team does for DPU. Then that metric that DPU uses is a return on net assets, which is basically your operating income divided by your net capital, right? And so that is done calculation as well within the limit is 8%, correct? And we are under that metric. So if you look, there's a net operating calculation. So operating, when we say operating, it's just your operating expenses, operating revenues, but you can bring in, your non-operating revenue. If you use that number, it could be over 8%.
Sure.
Okay, but that is not the calculation. And that may be partly what Bianca was asking about, but I just wanted to follow up because Bianca had asked about that. But it was a hot issue many years ago on the audit, so that's why I know it so well.
Is it then the broadband that pushes it over the?
No, it's fully compliant. But if you bring in the non-operating revenue, your interest income and other revenues, then it could be just slightly, and actually this year it wasn't over, but if you went back to 23, it was slightly over 8%, but that's not the calculation, and it's.
That's not how it's done anyway.
Right.
It's not how it's done, right? And so there's you can explain it, Jason, there's a very specific filing that you
Yeah,
have to do,
exactly.
right?
The DPU and Dan helped file the DPU report this year, but they walk you through what they need, and we get those from our financial statements, which is why the timing of all of this is so important. And, once you've entered those things, they'll tell you what your percent was, your rate of return, and it needs to be under 8 for when you factor in these things. But to your point, you're absolutely right, there are some things that are outside of that.
Yeah.
And just to clarify, the DPU doesn't oversee rates for municipal light plants.
Yeah,
They do oversee the rate of return and also the mandatory annual filing for rate plans, but the rates are locally controlled by.
that's right, I got it reversed.
Yeah, but the IOUs, the Eversources, Unitils, National Grids, they have to submit their rates for approval to the DPU. The light plant does not. The light plant sets rates based on the rate of return needed to hit a target that the light board decides each year. And then those rates are filed with the DPU so that they're available for transparency and to ensure there's no rate discrimination and that customers have a point of reference and a neutral third party that's kind of behavior of the active rates. And that's the DPU function.
Great, thank you for that clarification. While you're still here, and I did want to take an opportunity to just get your perspective. You've chosen to select a new auditor moving forward. Can you just speak a little bit to your experience through this and why the new auditor and?
Yeah, we kind of prepared, have been working on a timeline to go along with 23 and 24. We've definitely experienced some challenges. 23, our audit was delayed. It was principally done in the summer, in I think July, August timeframe, and it wasn't actually received final until November, which is again, when we need to file that DP report by September 30th, our goal is to have our audited financials done well before then. We also use those audited financials to help us do our revenue estimations for the next year and do our forecast planning. That was a big challenge, and we were told, that was in the Markham years, we were told that those delays were due to the new national review. When they were Melanson, things were more local. Markham had kind of a national, organization where they had they pulled a certain percentage of the regional and local audits that needed to be reviewed by another level. And that process, we were told, was backlogged, and that delay was several months. And so, that was difficult. There was a lot of kind of lack of communication or proactivity on their part in terms of we have inventory, almost $2 million of inventory. That's part of the audit process, where we'll do spot checks and actual verified inventory as a part of the pre-audit work. And challenge getting folks on site to do that. Our auditors were scheduled to start in May, right after NAN had started, and just didn't show up for the 24 audit. And asked to reschedule for a month later, and said that there were staffing issues at CBIZ. And that delay led to the series of other delays where it really did impact the schedule, which is why we're here now.
Cause even if they're done in November, but they said they wouldn't be able to get our statements till
Right,
February.
even after several other delays. Because the problems with reconciliation, as you pointed out, we kind of date back a while. It wasn't like something new popped up, right? So we were trying to get guidance on how to handle that. For the last couple of years, interestingly, I think folks have been talking just in the among the general management community and among the folks who are in Man's position, the financial manager role, within the light plant community, and just there was an awareness that there are some firms that do more NLP audits than others. And we started talking to some of our peers about their experiences with our auditing firm and others. And we thought it might be a good opportunity with some of the challenges that we had to get a fresh set of eyes. Because I think the other challenge that we saw was that some of the CBIZ delays for us were because they were still trying to work with the town on their audit. And there was just this interdependency and perhaps kind of a lack of focus on one piece rather than trying to look at the whole, which is a more complicated thing. It's much easier if the light plant has a problem, if the town has an auditor, they can say there's a problem over there and vice versa. But if it's one, firm and they're on a perpetual cycle, a lot of in this group and that group and this group and that group, like where is the line from when they're stopping and when they're starting? And so we just engaged some other communities and started talking to them, and we did a survey and found that I think 22 to 23 MLPs use Goulet, Salvidio and Associates out of Worcester. We reached out to them and had a conversation. We checked references of 3 speaking to the business managers or general managers in those communities, and just to find out, like, were they bringing things to the table that you saw as beneficial? Like, did they have access to benchmarks or other data? Were they acting on a timely basis to, when they started the audit schedule, it was repeated year after year? And then are they, I think everybody knows the things that are really strong and the things that are less strong. And your hope, the community's hope is that the auditors are really getting a nice even sampling of everything. And some things you're giving them and they're going, yeah, that's really strong. And some things they're giving them and they're saying, well, this could be better. You have some control issues here, we'll work with you. I think that we want to see that level of analysis and from our auditors, like, we're paying them a lot of money, and the benefit that the community gets is peace of mind, but the benefit we get is improvement year after year if we're getting genuine feedback. It's scrutiny. And so that's the feedback we got on Goulet, Salvidio and Associates, was that every year people felt like their financial statements were improving because of controls they were implementing at the recommendation of the auditors. And they were also having a lot of access because the auditors were managing so many MLP financial statements and accounts. They could say, hey, we're having a new project coming up that's a $20 million substation upgrade, and we want to make sure we do this in the right way, and we're thinking of opening this account with this borrowing and doing this. And with their experience, they can actually provide really good advice to say, well, let me show you how this group handled it and it worked really well, and we can put you in touch with them, or we can show you what their statements looked like after they did that project. So that we can then, rather than reinvent the wheel, we can sort of get that guidance, and that was feedback we heard time and time again. So we spoke with three, I emailed with the others, heard nothing bad, everything was extremely positive, and so we reached out and said, could we do a 2-year cycle with Relay Somebody and Associates, and that's what we committed to, with Carrie and Jennifer's support, to have them, prepare financial statements and do our audit in 25 and 26. They came out in, when did they do the inventory?
January.
Early January. That was the other interesting thing, is historically our inventory audits happened in November. You want to capture a full fiscal year. Relay really likes to come out the last week of December, or the first week of January. There's a lot less reconciling that has to happen later to say, like, well, let's run adjusting reports to see what has changed, and that's a challenging time of year, as you can imagine, with a lot of staff out and, winter weather. So anyway, they came out, they did that. We've had a lot of requests, data requests from them. They are committed to a firm schedule that, provided we give them these materials, they will have us done on the schedule, which adheres to our previous schedule that we would be expecting in, June timeframe maybe, or July, that will be done with the audit well in enough time to handle our DBU filings and use that data to plan for the next calendar year's forecast.
So that's great. So you've got a 2-year contract?
Right.
Okay, so we'll be interested to hear what happens in this
Yeah.
next audit. And so it also sounds like time frame wise, over the summer, you'll be right where we used to be, which is talking about your audit
We're
dollars.
coming in May, right, so we plan to close December by.
March,
by-
we have to close
We
it by
have
March
March
31st.
March 31st. Our system only allows 4 periods open or 3 periods open. It's not.
Yeah.
Okay, that's
90 days
that's the 90
after.
days, yeah.
Yeah, so it will be closed by March, and then obviously, there's a little bit of time that we'll wanna be working on our cash reconciliation and doing other things. And that's what we'll be doing in April, and then they'll come in May to do their site visit, and that's usually 3 or 4 days. And they're pulling contracts, looking at leases, looking at vendor bills, writing reports.
Journal
access
entries.
To the systems,
Yeah,
exactly.
yeah.
Documentation.
Yeah,
Mhm.
processes, yeah.
Any other questions, committee?
This will be a different firm than the town's auditor, right, which is Roselli and someone. Right. And so can we get a copy of whatever presentation or proposal I made so we can understand our qualification? And how long have you been the head of the light plant?
2 years.
Okay. I think it'd be important for you to make sure that you understand or read the fact charge, our committee charge, so that we're following what that charge is.
Yeah.
And then I have a couple of other questions. One is on the staffing. Has 4 people been the head count for the years that you've been in charge of the light plant? So that hasn't changed. Okay. And then I was reading the financials. You don't have to answer this question now. We can do it maybe in the next session, because I know we're gonna have another one. But there was this thing called, there's Energy New England LLC, where it says what caught my eye is this functions as an autonomous entrepreneurial business unit that is free from many of the constraints imposed on traditional municipal utility operations.
Okay, so when you
That's a
speak
lot.
to E&E,
It
there's a
makes
lot.
me
yeah.
uneasy, it makes me uneasy when I read autonomous entrepreneurial outside the constraints of. But it may be something that we have a discussion on at the next meeting, rather than just putting someone on the spot to.
I'm happy
But
to
he
speak about it.
knows that up.
Yeah,
Yeah.
yeah, so Energy New England is a cooperative under chapter 164. State law allows for cooperatives to be formed among MLPs to serve a certain purpose. There are a few in the state. Another example is GML, which I think is Georgetown, I forget what the M, and then Littleton. And these can be formed for a variety of functions. E&E's initial formations surrounded power supply management. Power supply is a lot of work, because every minute we are being expected to reconcile the power needs that we are having with the contracts that we already have. So we buy a certain amount of power. We have this hydro and it's offline today, right? We have this wind, it's not producing today. We have this nuclear, the reactor's down for maintenance. So though we have contracts, there's a real-time reconciliation that needs to happen with the power that's actually coming in that you've contractually purchased with what you're actually receiving. There's always a variance. we aim to be somewhere between 80 and 90% hedged. In other words, that's the power we buy ahead of time. The rest is left to the spot market. You definitely don't want to continue to over hedge so that you have to sell power back. You're often doing that at a loss. So we kind of target that frame to leave less risk for ratepayers, but ensure that we're locking in some good competitive contracts. So power supply is not just negotiating a contract, it's really that real-time reconciliation with ISO New England and all of the contract holders and managing that. So originally, this cooperative formed to say, okay, instead of having to have 4 staff members at each MLP that's doing this, we can hire 8 people and do it for all the MLPs because it's the same exact function, it's the same data coming in, and as long as we have all of your contract data, we can then do this on a daily basis. And then so that's how that organization works. We receive bills for them, our spot market payments, our reconciliations, and then they make sure that all this money gets paid to the people that we owe money to for the power supply that we give it. We have other contracts with Energy New England, for example, like our EV programs where people want to get rebates or whatever. So Energy New England has expanded the services that they offer MLPs. We're one of dozens and dozens of both Massachusetts MLPs as well as New England wide customers that they have where they manage some of these programs for. So we don't have to hire more staff and that can be done on a contract basis, especially where the volume really does vary based on federal incentives and time of year. They can have staff that can serve many MLPs and not us have to incur, routine payroll and support for these people that may not have regular work.
Thank you.
Yeah.
Great. All right, so I think we pretty much covered the CMLP audit. I know it's too complicated. Well, we have you took 3 today. I'm gonna do the whole thing. All right. So from an agenda perspective, we started a conversation about our auditors and we have a good sense of your audit schedule. We'll have to have this conversation again when it comes to the CCRSD audit, but in terms of follow-up on the light plans audit, this on the agenda, we had sort of a discussion item. I'm wondering if, because the issues are so tied to the town audits, we separately already agreed we're gonna have a follow-up meeting on the town audit discussion that we can sort of feed in those issues into that discussion, because I think they're really on the town side, less than seeing the audit. However, I think I just want to comment, in our last meeting, we had some discussions around wanting to understand more about staff and structure. You heard some of that today, so we may ask you to participate in some follow-up on that discussion. And then obviously, we also are all concerned about the system complexities and that integration, and we want to have some follow-up on that as well. And we also have a number of things from our last meeting that we were going to have some follow-up on to adjusted entries, some follow-up on the timeline of communicating with the town audit. There are a number of items that we talked about in our last meeting. So we're going to queue those up for our follow-up meeting, which the question is, when are we going to have that meeting? So the challenge we have, I think Jennifer did a poll of our committee members and there was no time that is really working for people very well. We have a few people who have not responded. So let me just ask, people have their calendars with them now? Maybe
That or a doodle poll might work better in the future, so we can
see people's audits.
make adjustments to our calendars as we,
Okay.
instead of just saying yes or no.
Well, what are people, I don't know how to do a doodle.
That's a good point though, because I had some maybes.
Right.
Yeah.
If
Is
push
there-
came to shove,
I would move that.
yeah.
Could we do this in a Google Doc that people would just go into and just do entry?
I can set it up any way you want.
Okay.
There is a scheduling poll function in Outlook that you could vote for your
Yeah.
favorite preferred time.
But you could see other people's response?
Yeah,
Okay,
I
important to
do
see
have
other
ways in it.
Yeah,
Yes, what I need more is a
Yeah.
direction, any days of the week,
Yeah, well,
not
that's what we're
good.
on next, yeah.
Like morning better than afternoon, the evening, I kind of tried to pick some times where. A variety and whatever day I happened to pick that particular time just wasn't working.
Well, let me just start with a poll. So, does during the day work for people, mornings or afternoon? Does anybody have a strong preference for mornings or midday, later in the day or evenings?
Yeah, if we're not gonna need to see this in the next session, if we do it in
Well, but let me, if we don't need CVS, can people meet in the evening? Of course, finding rooms is not a bad thing, but.
So for me, Wednesdays, Fridays, I have the most flexibility, or evenings, depending on all the other
Okay.
meetings I have.
Bruce, any preferences?
I mean, I will make anything work up until March 10th. And then from somewhere there's 8-10 days I'm gonna be gone. So the 11th to the 21st,
Okay.
somewhere there. But I can make anything up till then at work. But the sooner we do it, the better.
Yeah. That would work out. For any,
I need to avoid Thursdays as usual. Everything else is pretty flexible.
With this being the 26th and you're
yeah,
starting the 10th. You're out of pocket.
I mean, I can move it a couple of days. I'll do what best I can.
so Jennifer, there actually was a time where I think 3 people could make the 9th, which would be, what was that time? Not everyone could make it, so I'm just.
Yeah.
and I
Well,
don't know who it was.
let's test that idea again, the
Right.
Monday the 9th you're talking about.
Yeah,
I had 2 people available in the morning and 2 people available in the afternoon.
I can make changes to make anything work on Monday tonight.
I can.
I can.
Okay.
Bruce is, yeah.
So that looks like maybe morning would be better unless it's a no times.
If it's first thing, like 9 a.m., fine, or it looks like anytime after 1, I'm open.
Okay. Did we try 9?
I prefer one if.
I prefer
Okay.
one. I can change it as the appointment. It's not a big
One
deal.
would be-
One would work?
1 would be
One.
better.
Better for me.
1?
1 o'clock
Okay,
on
so-
Monday.
So the goal of this meeting is to follow up on the town audit with the items that we have already, that I was just mentioning earlier, which means Jennifer and I need to follow up.
So not region, I don't need to,
Not region, because I don't think we confirmed Bob or confirmed, CBIZ. We need CBIZ here,
I'll
so,
send a couple of times to Bob and CBiz
right,
and
Okay.
see if I can get them on it. The way we did the first one, I asked them for 5 out of the 9 dates that I gave them. And then we pulled
Okay.
you guys on those 5 and came up with
Okay.
it.
I would hope that would be the easiest one, because that was the
Right.
easiest and cleanest audit. to
yes,
it.
yeah, it should be quick, yeah,
And maybe we can have a dual agenda presentation and then more discussion.
yeah, let's see. Yeah. Okay, yes, that would be a good. one.
Okay, so.
Okay, so
my
we're gonna
question
shoot
is
for Monday, the 9th at
Blocking
1
out the
o'clock.
10th or 20th as well. So I'll pick some dates on Wednesdays and Fridays
Sure,
Perfect.
really good.
before and after.
yeah, okay. All right, and I think that is it. I don't have any other business. We're about a date. If people have additional information they'd like to see in that follow-up meeting, please send them along. I know Brett, we sent a few items that we're following up on. But if anybody else has follow up with him.
Thanks.
All right, so with that, I have adjourned the meeting of Financial Audit Advisory Committee. So doesn't need second, I can just.
Oh, you can
If
do
you're
it.
all here, if you're all here, if you're remote, then I have to do a roll call.
Thank you.
Yeah,
Thank you.
thank you all, appreciate it.